Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, just a quick recap and update on the symmetrical triangle that we've been talking about over the last few videos, and that we're going to have a breakout sooner or later. And depending on this diagonal trend line, then it's obviously broken out in the last couple of days to the upside here. But before I do the analysis, I just want to give you the polite reminder, as per usual, please remember everything in my videos is for educational purposes and nothing should be taken as financial advice. This is very important because I can only tell you what I'm looking at and my perspective, and in terms of the trades that I do myself. Obviously, every person out there is unique. They have their own portfolios, they have their own mindset, they have their own risk-reward ratio. So nobody on a YouTube channel can tell you what to do. So that's why I always say, please do your wider research and then do something that's completely unique to you when you make your own decisions. So yesterday I tweeted that when I looked at the line chart, that confirmed that we actually broke through this symmetrical triangle that I've been showing you. So this was the daily chart with the line chart, and this was the weekly chart with the line chart. And if you want to know where the line chart is, if you go to the top of Trading View here, where the candles are, you'll see that there are different types of charts, and the one you need is the line chart there. And as you can see quite clearly, whichever way you draw this trend line here, we have now confirmed the breakout to the upside. Obviously, there's always a chance of a fake out, but we have to see it for what it is. It is a breakout, and the next level is at this point here. So we should see a test of these tops here, which is basically at around about the $44,500 mark. So we should have a run up to these levels at the minimum. And if we go to the weekly chart, you can see quite clearly that we've broken out from this symmetrical triangle here. And as I mentioned in the last couple of videos, we closed above the 8 EMA here, which is above the 8 EMA line, which is the blue line here. And currently we're going further up. I was expecting at least a little bit of a pullback, but it shows the momentum to the upside that the current weekly candle is taking us much further. But we have come across a little bit of a resistant point at the 21 exponential moving average here, the yellow line. And as we can see, we've gone up to that point and then got rejected. So in terms of the levels, I would expect to go anywhere between the top of the wick to the body of the candle, which is between 44.5 and 45.5. That's from this point here, but we could quite easily go to the top of this candle here, which is around about the 45,800. So the way I'm playing this, and I can only tell you about myself, please don't take this as financial advice. So I've taken a swing trade with a view to taking it at least up to here, and we'll see what happens here when I see the candle formations. And I've set a stop loss below this wick here at 40,130. So should we break below that, then obviously I'd be out of that, because then the narrative for what I'm thinking then breaks down. And the thing with swing trades is that when the narrative, the thesis that you've actually put a swing trade in breaks down, you need to just get out. You can't start saying at this point, oh, we'll give it a little bit more room, a little bit more room, a little bit more room, and then you end up going much, much further. So for me, there is a swing trade here up to these levels, 44.5, 45.5, all the way up to about 46. And I'll consider whether to take out some positions in terms of dollar cost averaging out at these points here. And as I've mentioned many times before, once we flip over, if we do, then I'd be willing to go full on in here to take advantage for the big move up to here, if that occurs. I'm not expecting it to do that, but as good traders, we must always keep open our flexibility, keep an open mind in order to take advantage of unexpected moves. So as a swing trader, my belief is always that we must have a plan for both scenarios, to the upside and to the downside. Okay, so we'll leave it there. I hope that helps. I hope you found value in that. And if you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, then please leave them in the comments below. Until the next video, take care, stay safe, and I'll see you in the next video. Bye for now.